Welcome to etvFutures.com. It's Monday, February 11th. I'm Remy Huki for your Commodities Recap. In energy, NYMEX crude oil futures gained for the third consecutive session. The benchmark crude oil contract ended with a gain of 2% on the day. Supply disruptions outweighed concerns about slowing global growth and weakening demand for oil. Over the weekend, Venezuelan President Chavez warned of ceasing oil exports to the U.S. Last week, ExxonMobil won a court ruling to halt a U.S. bank account holding some 200 million euros in PDVSA funds. Exxon is now challenging Chavez's government and seeking compensation for the nationalization of oil fields that it exploited in Venezuela. March crude hit an intraday high of $94.72 and closed out the session up $1.82 at $93.59 a barrel on the NYMEX. Taking a look at metals, there are strong gains across the board. COMEX gold continued its upward climb while platinum hit another record high. April gold rose $4.40 to end at $926.70 an ounce. Platinum futures soared, hitting a new all-time high, and the April platinum contract added $55.40 on the day, ending at $1,939.40 an ounce. Now we're joined by James Mound from James Mound Trading Group and author of the Mound Report. He'll give us his commodities outlook for the week ahead.
This is James Mound for MoundReport.com with the week ahead for February 11th. This week is all about the grain markets. We had over the weekend an expansion of the price limits in wheat to 60 cents. Formerly 30 cents. A lot of times in markets like this, historically speaking, we have that as a major signal of a cycle reversal in the markets. That means that what we're getting out of the grain markets is a potential top. This is a market that's gone through extreme price rallies here, and the overall psychology of it is once you start expanding price limits, you also have to expand price margins, and people have to change their position sizing, and they have to change their stop placement, and it can trigger a major market reversal, which we actually have seen so far today. Market was lock limit up overnight, up 60 cents, and here we are closing the day down 34 cents and change. And it's a major signal for market reversal in wheat, and it should take the other grain categories down with it, like soybeans and corn. So look to develop bear positions in those markets over the coming weeks and months. In addition to that, last week we saw a major U.S. dollar rally begin to occur. A lot of that was due to the fact that even though the European Union, that is, did not make a rate change, we did see a rate change from the United Kingdom. And I believe a lot of people are turning a corner here and realizing that despite the fact that you could perceive what the Federal Reserve has done as an aggressive rate-cutting stance, the Europeans seem to be a bit behind the curve here. And that being a bit behind the curve is going to come back to cause a longer-term recessionary environment for European countries. That should be a big catalyst for the U.S. dollar in the next couple of months. Could also cause some pressure on gold and silver prices, even though we've seen a sustained rally in both of those markets right now. We're seeing huge price moves in markets like platinum and palladium, mainly due to the fact that we've had some South African mine shutdowns due to electrical blackouts. But overall, when you have a strong dollar, you have a weak metals market. But given the fact that the dollar's been weak for so long, the metals market's having a bit of a delayed reaction here. And this gives you a great entry point to establish put positions in gold and silver during these huge up days that are offering some discounted premium entry points. Last but not least, let's take a look at the coffee market. This is a market that's been holding a long-term trendline support, weekly, monthly chart, and overall very bullish long-term pattern is developing. But we haven't seen it just get up and go. And over the past couple of weeks, we've really seen this market take off from a major trendline support, break through previous contract highs that were set last year, and set off in a volatile upward trend. And this is mainly because of a short covering rally. There isn't tremendous news. We know that there might be some yield issues in Brazil. We know that there might be some weather problems in Vietnam and some quality issues there as well. But overall, this is just a market waiting to get funds and spec buying to push this thing over the edge. And so I'm a buyer on any dip in that market, and I expect to see a historic rally in coffee over the next 3 to 6 months. And that'll do it for me, James Mound, MoundReport.com in the week ahead. I'll be on vacation for the next few weeks, so I'll speak to you probably on March 1st, and you have a good rest of February.
That was James Mound from James Mound Trading Group with his commodities commentary. I'm Remy Huki. Join us later this afternoon for PM Exchange right here on etvFutures.com.